She's with us now. Wendy, well, of course, we had Eddie Tam saying not all Chinese companies are fraudulent. Of course, that's true, isn't it? I mean, but you have to be careful, don't you?
Yeah, I think investors do have to do their due diligence very carefully, and I think this is the same as you would be doing due diligence on U.S. companies. You got to check the channels, look at their products, and look at the end market.
Yeah, and so you're suggesting that if you get in now, you'll benefit from upside, which is coming in, let's say, late July.
I think this is the time to be very bullish and very positive on the Chinese equities because the reality are not as bad as perception. I think that's key.
Okay, so tell us what the divorce is between the reality and indeed the perception.
Okay, I think the reality is if you look at growth, it's still very resilient. We call the SMEs, they're hurting a bit relative to last year, but it wasn't that bad. You look at export, moderating a bit, but if you talk to a lot of the U.S. retailers, they can't source sufficiently outside of China. Orders go into some of the smaller ASEAN markets get returned. And you look at social housing, the local government and the property developers are going to have to do this.
Okay.
Yeah.
The property side of things, does that concern you? Because I said, did you notice a shift that people left the equity market to invest themselves in housing? And do you see that money coming back?
Not at this point, because I think that is sort of a self-reinforcing mechanism. And I think for property, we do expect policy to be tight until there's a bit of an expectation change on future prices. But I think most importantly, macro policy this year is all about finessing, and we are likely on the verge to go from being tight on monetary policy to being neutral. And the most important time to watch for that is from now till early to mid-July.
So you're suggesting we will not have any more tightening and, in fact, we'll have a bit of loosening take place?
We may have a bit of a pausing and a little bit incremental shift to the neutral.
Okay,
and if you remember, from late February to early April, we had a relief rally quite substantially based on the pausing of tightening and driven by chaoses in the Middle East. My view is that, and our firm's view, is that with the situation in the U.S., in Europe, and fundamentally growth is important to Beijing, we may see a bit of an incremental change in that regard.
Right. Well, let's just get an idea of what the People's Bank of China is looking at. We're looking at inflation, of course. It's very concerned about that, and people saying that the base effects come out in China's favor towards the second half of the year. But, I mean, just had a headline across the Bloomberg terminal saying that pork prices are up by a record amount. I mean, these things are happening. We are getting record prices going up for foodstuff.
Yeah, I think that's a very valid point. Three things to be aware of. If you hike your interest rate based on a CPI that's driven by pork prices, you tell me if that makes sense or not.
But I'm just using it as an example for all foodstuffs. I think you take account of 40% of the food.
Yeah, no, I think you're making a very good point. But just are people going to eat less pork when you hike interest rate? And so maybe monetary policy is not that effective in determining the supply and demand of food, right? But it will hurt liquidity and incrementally growth. So I think we're at a point where policy needs to consider, do I need a bit more growth? And if I need to cure the inflation issue on food, is that supply demand or is it that money?
Okay, so give us an idea, where should you be invested very briefly, and indeed what sort of returns are you looking at?
We asked people to take profit in April and put them in defensive positions. Since then, I think right now the better money is really by selling the defensive and going into stocks that have sold off very substantially. If I look at the MSCI's China component list, there's a longer list to buy than a list to take profit from or to trim. And the better money, I think, in banks, expressway, construction machinery, just take out that list, see who's declined a lot, and then go from there, using that as a basic screen. Yeah.
Wendy, thank you so much for coming on the program.